What is a merchant account and does your business need one? For businesses accepting credit card payments, the phrase merchant account may be familiar. And for good reason, merchant accounts are a key element in the world of payment processing. These accounts are essentially banking channels businesses use to process electronic credit and debit card transactions, often offered by banks and credit card processors. To set up one, your business partners with one of these entities. Subsequently, you'll be able to process digital payments with ease. It's no surprise that electronic processing and e-commerce are increasingly important to businesses in the modern world. Studies show that customers today rely more on digital payments than ever before. 1. In the context of the COVID-19 pandemic, throughout which consumers have highly valued contactless options, this is especially true. Offering this functionality can draw in more customers, thus more sales, to your business. Fortunately, the credit card processing market provides you with many options, some of which involve a merchant account. In this guide, we review what you need to know about merchant accounts, so you can determine what options are best for your business. What is a merchant account? Simply put, a merchant account is a banking channel set up by a business to process electronic credit and debit card transactions. To obtain a merchant account, a business must partner with a merchant acquiring bank or credit card processor. These entities manage, regulate, and facilitate the communications for these digital payments. The merchant acquiring bank acquires rights to the merchant account. In doing so, it manages electronic card processing for the merchant. The merchant acquiring bank does this through a merchant network, enabling the bank to process payments, hold funds until settled, settle transactions, and deposit settled funds into the business's bank account. A merchant services provider is the entity bringing all of these parties together so your business can process payments from customers. In addition to credit card processing capabilities, a merchant account provides ancillary services to business owners. These vary by provider but are worthwhile to consider. Here are a few of the most common examples. Chargeback protection, e-check processing, virtual terminals, online fraud prevention. Oftentimes people confuse a merchant account with a payment service provider. However, these two payment providers transact electronic payments differently. How does a merchant account work? First, it's important to establish how merchant accounts work and how the different moving parts affect you as a business owner. Generally, to set up one, your business must initiate a partnership with a merchant acquiring bank or credit card processor. These parties manage and facilitate communications that make your digital payments possible. The merchant acquiring bank obtains rights to the merchant account. This allows it to manage electronic card processing for the merchant. It does so using a merchant network, which allows the bank to settle transactions and deposit settled funds into a business's bank account. As this happens, the acquiring bank processes and holds payments until they can be deposited. Generally, you can access the funds in your business account in 1 to 2 business days. Merchant service providers combine these functions to offer streamlined processing. Now that you understand the gist of the process, let's examine each entity that works to process payments for your business. Credit card processor. 2 processes take place during credit card processing: authorization and settlement. Each requires communication between several different entities, including the cardholder, merchant, issuing bank, acquiring bank, and network. Think of a credit card processor as a middleman who routes the money and information associated with transactions for the business. A merchant, or business that has a merchant account, receives a payment using a terminal, software, or payment gateway. Then, this hardware or software transmits the cardholder information to the acquiring financial institution or their processor. Without a processor, these separate entities would have a difficult time communicating. Transactions could take days to process, as opposed to seconds. Issuing bank. The issuing bank receives transaction information from a credit card network. It approves or denies the transaction. If approved, the bank transfers the funds from the customer to the merchant account. After the funds go into the merchant account, the merchant can receive the funds into a business bank account. Acquiring bank. A merchant acquiring bank establishes a contract, or merchant agreement, with a business to set up the merchant account. This relationship makes it possible for a business to set up electronic payments. The acquiring bank is responsible for coordinating electronic payments. This includes communicating with card issuers, extracting information from the merchant, and settling the transaction into the merchant account. Credit card network. The credit card network is the company that communicates between the merchant and issuer to authorize a transaction. These include Visa, MasterCard, American Express, Discover, and others. What does this communication with the card network look like? When a customer buys a product or service from your business using their card, the card processor sends the details of the transaction to the credit card network. Then, the credit card network sends those details to the issuing bank. Independent Sales Organization, ISO, or Merchant Service Provider, MSP. An independent sales organization, ISO, and merchant service provider, MSP, are third parties that offer credit card processing services outside of a bank. The terms are often used interchangeably. An ISO or MSP offers a variety of merchant account solutions. If you choose to work with one, it's important to review your company's unique payment processing needs. This will affect what fee structure and services make the most sense for your business. For example, MSPs offer hardware and virtual solutions, so if your business regularly takes payments online, you will want to review what virtual solutions are offered. Furthermore, providers differ in their customer service options, fraud prevention tools, and integrations, which are important factors to consider. Integrated software vendors, ISV. Integrated software vendors, ISVs, offer integrated payment processing solutions for your business. These vendors can integrate your business's virtual terminals or online shopping carts directly into your e-commerce website. Consequently, you can process digital payments through your current website and link them straight to your merchant account. Merchant accounts versus payment service providers. Every business that accepts electronic payments can either set up a merchant account or accept payments through a payment service provider, PSP. Even if you're not familiar with a payment service provider, chances are you've heard of the most popular ones on the market. Let's compare the main features of a merchant account with the features offered by payment service providers. Simply put, both a merchant account and a payment service provider aid businesses in accepting credit card payments. However, a merchant account utilizes a merchant services provider, payment processor, and gateway provider to allow credit card processing. Whereas a payment service provider is typically an all-in-one solution for merchants to process credit card transactions. Unlike a dedicated merchant account, a payment service provider offers businesses a way to accept payments immediately. Popular examples of payment service providers included PayPal, Stripe, and Square. With payment service providers, a merchant cannot enjoy the same level of flexibility as it can with a dedicated merchant account. A PSP does not typically allow you to negotiate terms and conditions or agree on a specific pricing plan. Unlike with a merchant account, the terms, conditions, and pricing have already been established. Additionally, a PSP has more technical restrictions because it contains so much proprietary software. A merchant account, on the other hand, is a banking channel designed specifically for accepting a business's credit and debit card payments. This is done through a bank or payment processor. The processor sends the revenue from digital transactions to a merchant's regular bank on an agreed-upon settlement date, which usually occurs weekly. At that point, the deposited funds go to a merchant's regular business checking account. All fees and terms are negotiated during the approval process and can be found in your merchant agreement. How to get a merchant account? If you want to sign up for a merchant account, contact a reputable merchant services provider, but do pay attention to the types of businesses they serve. As noted, some service regular business transactions while others specialize in high-risk processing. Know what you need prior to signing any agreements. What to consider before seeking merchant account solutions. Merchant service providers offer different merchant account solutions depending on the nature of a business. Therefore, when choosing account solutions, you need to review your company's exact needs for payment processing. Scrutinize the fees. Consider what the company offers in customer service and support. There is much more to a merchant account than just standard processing. Factor in these features before you settle on a provider. Hardware or virtual solutions. Merchant service providers may offer hardware or software solutions based on how you do business. To determine what you need, consider how you regularly take payments, whether that's online, in-store, by mobile, or a combination of those. That way, you can discuss the choice of credit card readers that best accommodate your payment needs. If you're looking to do business online or over the phone, you need an online virtual terminal option. Conversely, if your business is strictly in-person retail, a POS system or standard credit card reader will work. Integrations. Many processors offer integrations through virtual terminals or online shopping carts, which you can connect directly to your website. This allows you to process digital payments through your current website and link it directly to your merchant account. This is an invaluable tool for businesses with e-commerce sites, which rely on card payments as their main source of revenue. Understanding merchant account fees. Merchant account solutions typically feature one of three basic pricing models. Your provider either charges your company a flat fee for each transaction, a fixed percent per transaction, or a combination of the two. Small businesses often like flat rate pricing, as it makes paying for credit card processing more transparent. Does my business need a merchant account? Do you need a merchant account, or would it be more beneficial to use a payment service provider? While a PSP allows for a fast payment processing setup, merchant account solutions can be customized to meet your company's overall processing needs. Additionally, if your business falls into a gray area regarding risk, chances are high that you might not even qualify for a PSP. Therefore, if you're seeking credit card processing for your business and want a hands-on approach, securing a merchant account is in your best interest. With this tool, you'll be able to receive tailored fees, risk prevention tools, and customer service for your business. Once you decide on a provider, you'll be ready to process payments in no time. And with that, we've reached the end of this video all about what is a merchant account and does your business need one. Get involved and let us know in the comments section down below. We hope you found this video helpful, and if you enjoyed it, don't forget to like and subscribe for more videos just like this. And turn on the notification bell so you don't miss out on our latest uploads. Thank you for watching, and we'll see you in the next one.